In this video, I'll be providing a performance update of my InvestEngine ISA portfolio. For those new here, I have a goal to reach 100k stocks and shares ISA portfolio by 2027. I'm using InvestEngine as the primary platform to achieve it. This month, I've taken another big step towards the 50k mark, which will be a key milestone in my journey. But before we take a look at my portfolio, let's kick off as always by taking a look at what's been happening with the markets over the past month. We can see it's been a great month for Europe, as the Stoxx 600, which covers 90% of the European free float market, is up by over 5% in the past month. This is much higher than the US stock market, measured by the S&P 500, and other stock markets around the world, like in Japan, where the Nikkei 225 was actually down by 0.64%. Although the UK is included in the Stoxx 600, it's not been driving the positive performance in this index. As if we take a look at the UK market in isolation with the FTSE 100, this index only grew by 1.50%. This is still good relative to the past performance of the FTSE, but it's much less than the Stoxx 600. The growth from this Europe index is very much unexpected, and it's actually the best start to the year for European stocks since the 1980s. So what's caused it? Well, it's likely to be Trump, of course, with his decision not to impose immediate tariffs on the EU, as well as the prospect of peace talks in Ukraine. When Trump came to power, the EU was seen as a key target of Trump's America First policies, as he previously pledged to impose tariffs across the entire region. However, at the time of recording at least, no EU tariffs have taken place. This absence of tariffs has been extremely well received by the markets, as since Trump's election, the Stoxx 600 has actually outpaced American and global indices, and it's outpaced them by a distance. So fingers crossed we continue to avoid a Europe-US trade war. And in terms of the overall performance this month, Europe is the standout market. Before we take a look at my portfolio, I want to mention that InvestEngine still have a great sign-up offer for new customers, where you can get a bonus of up to £100 when you deposit £100. All the terms and conditions and a link to this offer can be found in the description of this video. Now we know this, let's bring up InvestEngine's app and take a look at my portfolio's performance over the past month. We can see that my portfolio currently has a balance of £46,633, made up of £45,133 invested, and then I've got £1,500 in cash, which is my regular monthly deposit. And this cash is ready to go and be invested on the day of recording. In terms of the performance over the past month, I'm in the red. I'm down by £374 in pound terms and 0.15% in percentage terms. We can use the graph feature here to see how the portfolio evolved over the past month. And we can see that at the end of January, my portfolio increased in value, but this was simply thanks to my regular £1,500 monthly deposit. After that point, from the beginning of February onwards, the portfolio went up and down a little bit, but was rather stagnant until the past few days, where the portfolio has slightly dropped, leading to this marginal negative performance over the past month. So overall, my portfolio hasn't had a good month. I'm in the red. History teaches us that the market is volatile in the short term. It goes up and down a lot. So I'm expecting months where I'm in the red in my longer term journey towards 100k. I'm expecting months where I'll be much more in the red than just 0.15%. I've been on a good run the past 6 months to last year, so I was expecting this to end at some point, and I was expecting red months. If we take a look at my portfolio's performance over the past 6 months, we can see that I'm up by over £4,000 in pound terms and nearly 12% in percentage terms. And if we zoom out again to see my portfolio's performance since I opened the account, we can see that I'm up overall by nearly £7,000 in pound terms and over 32% in percentage terms. So if we zoom out and look at my wider portfolio's journey, my wider portfolio performance, it still looks healthy to me. But the past month has been in the red. The only positive from this past month is that my portfolio is still increased in value. This is because although the performance is negative, the portfolio hasn't grown in terms of investment value, I've still added my usual £1,500 monthly top-up. So the portfolio has increased because of that deposit. Now we know the portfolio's performance over the past month, let's dive into the individual ETFs and check out their individual performances. Let's start as always with the HSBC MSCI World, which makes up over 80% of my portfolio. This fund is down by 0.81% in percentage terms. And this negative performance will have had a major impact on my overall portfolio's performance, given that this is the biggest ETF in my portfolio. You may be thinking, well, this is a world fund, so surely it should have benefited from the positive European performance we saw earlier. However, this fund is heavily exposed to the US, and the allocation to Europe is very small. If we look into the fund, click on it, and click on regions, we can see that only 12% of this fund is allocated to Europe, excluding the UK, and 3.8% to the UK. So in total, there's 15.8% of this fund allocated to Europe, which isn't a large allocation and isn't a sufficient allocation to have made a big impact on the overall fund's performance this month. It does beg the question for my overall portfolio whether I should rebalance and increase my exposure to Europe, or whether I should continue with my US heavy approach. Europe has had a very good start to 2025, but before that, for many years, the US dominated, and specifically big tech US companies. And I think I'll hold off rebalancing and increasing my exposure to Europe until I see some more results from European companies, as at the moment it's just 2 months of good performance. I want to see further results, and I want really clarification that Trump won't impose tariffs on the European markets, as I think this will be a very important factor in ensuring that Europe continues to have good performance for the rest of 2025. Let's move on to the next fund in the iShares MSCI World Small Cap. This is the worst performing fund in my portfolio over the past month, as it's down by 2.83%. I feel whenever we discuss this fund in these portfolio updates, I always mention US interest rates. And there's a good reason for that, because they heavily impact this fund. And with this video, we need to mention it again, as over the past month, some uncertainty has been created on the pace in which the Fed will start reducing interest rates. And this, of course, has had a negative impact on this fund, as small caps benefit from low interest rate environments. So the longer we have a higher interest rate environment, the worse it is for small caps, and this has been reflected with the performance. The next fund in my portfolio is actually in the green, and it's done very well, and that's the iShares Physical Gold Fund. This is up by 5.94% over the past month. And this gold fund, and gold more generally, has been on a very good run. If we click on the fund and look at the last 6 months, we can see that gold and this specific fund is up by over 21%. And if we zoom out further and look at the last year, we can see that this fund is up by over 45% over the last year. This is very good performance, and it makes it my best performing fund over the past year. So I'm very happy with this gold fund, and it's the only fund this month in the green. If we look at the final ETF in my portfolio, the Wisdom Tree Cloud Computing Fund, we can see that this fund is in the red, and it's down by 1.13% in percentage terms. This fund has been a good run recently over the past 6 months, so I was expecting that to end at some point, and this month it's in the red. But overall, now I've gone through all 4 ETFs in my portfolio, we can see it's not been a great month, as 3 out of the 4 ETFs are in the red. But this negative performance doesn't change my plan. I'm going to continue investing $1,500 every month, and this is irrespective of what the market does. No matter what the market does, whether it goes down 10%, up 10%, I'm going to continue investing $1,500 every month, as this is my plan to reach 100k by 2027. Let me know how your portfolios have performed over the past month, and thank you for watching this video.